can check my remote.
From 285 to, I think it took 3 hours. Yeah, it took 5 hours from Maris. Driving.
So my husband was coming from, he worked at Bristol.
I believe
Up 85. He came down
Oh.
85.
They're not up here?
we all do it to this and this,
Okay.
but
Did he get home?
I thought it was up
Well,
there.
it
Okay,
took
thank
him
you.
7 hours to get that far. We got to exit 7, because we live off of, no, 5, because we lived in Sandy Springs at the time. So we got to exit 5, parked his car, because it wasn't going in. By 7 o'clock, 8 o'clock at night, it wasn't going anywhere. Left the
Hey,
car and walked
free wine and cheese. I knew there'd be some commercial guys here.
in dress shoes. It's
And I knew you'd say something.
When you got home,
But I'm willing to bear the brunt of that.
Well,
Good glass of wine.
We couldn't disappoint each other.
He looked
Paul.
like a movie character.
You want to
Oh
cork
my gosh.
those
You know the
two
kind
bottles?
where they're
Or at least one? Pretty please.
frosted? Yeah, that's what he looked
Like
like.
Jeff
You know how
Frost
to do
and
it?
That's the
Tracy
one.
and the Santa Claus.
And the girls and I burst into tears. The first
What's
I
your,
said, "Don't leave
where you
your
were still the
car.
redheaded
Just leave your car
stepchild?
here. You don't know what it looks like. It looks
You
like
know
a
what?
house."
Some of these programs may apply, Charlie.
I know.
This is, I think you've sat through some of this before.
Is this the ones with the renovation loans?
No, this is not the renovation one.
Church parking lot in Roswell.
But there's another one in here that may apply to
There are a
you.
bunch of cars, there's
Okay,
a guy
I'm
gave him a
listening.
blind because it makes them
Then you
dog.
can edit it how you want.
I don't really care. Thank you very much.
Huge fan of it.
Oh, yeah.
Supposed to see it.
All right, let's go ahead and
How you doing?
Good. How you doing?
we'll get started because almost everybody's got their
I've
supplies.
seen some of his Facebook pictures and all, which are really beautiful pictures.
Thank God he's
You
trying.
guys feel free to sit at the front up there.
And I've already told, that's all right.
You know,
What's the latest?
Did you want to already start?
It doesn't look like Connie got that under contract. It doesn't look like Connie got that house under contract.
so I
But grapes are
she
so
was
good.
going out of town and
The grapes
I was
are,
busy last weekend.
If y'all didn't have any of the grapes,
Call her.
you need to try them.
They're very good.
They're like phenomenal today.
Becky prefers her grapes in liquid form.
12.
Well, but that's four points.
But I'm gonna call her and find out. I'm gonna call that other agent and have that lady from Macon.
Well, we're safe. Just to let you know, this is being streamed to your KW whatever.
So stop shoving food in our
No,
mouths like that?
what I'm saying was we had a choice. So hello to all the people at home. The only thing they're seeing is what's on the screen.
Oh, good.
Oh.
So they can't see all you guys dancing on the tables and, you know, with drinking the wine through a straw out of the bottle. And
Can they hear us?
they can hear us.
There is a second camera that can be brought into view that sits right up there over your head.
Oh, I know. But we're not going to turn that one on.
You don't want them to get jealous about the fact that we're getting wine and they're not?
Well, they're probably having their bourbon, so that's all right. So first of all, in case you guys don't know, this is our team. Paul, Deb, myself, Meredith, Matt. We're all here available to help you guys do more business. That's our number one reason for being here. That's it. We're here to help you guys do more business. So however we can help that, a lot of people come to us not only with loan questions of what we've got going on, but they've got a loan going with another lender that they're saying, hey, this is the problem we're having. Can you give me any advice? And please bring those to us. It's not offending us. Yes, we wish you were using us, but if you're not and you have issues, that's what we're here for. Is we're problem solvers, and we will do our best to help you guys out in any way that we can. All right?
So, what are we talking about today? Outside of the box lending, alternative lending options. So we'll talk about, we'll just basically go through these. So we'll talk about what is a conforming loan versus a non-conforming loan, how popular these are becoming and the rise in market share. So this is, the conforming products are holding pretty steady on their market share, but the non-conforming is gaining. So these are products that a lot more people are starting to use, and like we said, could help close more deals this year and beyond. We'll talk about an investor cash flow loan, which is heavily underutilized. Bank statement loans, asset depletion. Randy, you got an asset depletion one going right now. What if they've had a recent foreclosure or bankruptcy? Non-warrantable condos and foreign nationals.
Guys, this is stuff that it's outside the box.
Not a warrantable condo.
Yep,
Is
non-warrantable
that
condos.
new for you guys?
Relatively new.
Okay.
Okay.
And those are like the ones at the W
Yeah.
and places like that. Because the
Yeah.
one, the W downtown is non-warrantable.
Come on in.
That's that.
You got my
I had
text.
that last year.
You got my
You
text.
guys didn't have one yet.
There's wine, cheese, and the grapes are phenomenal. So get yourself some.
They're like little apples.
No, use your pants.
Yeah, they're like crunchy.
But anyhow, we want to breeze through the first part of this presentation. We really want to dive into the second part because that's kind of the meat of the whole thing. So let's go through this kind of quick. Conforming loans. You guys know what a conforming loan is. You've heard of Fannie Mae, Freddie Mac. I'll talk a little slower. Those are conforming loans. They're ones that, where we look at the credit, we look at their debt ratios, we look at everything, and it fits in this nice, neat little box that Fannie Mae and Freddie Mac will buy. And we sell them in bulk, and that's it. Conforming loans. Most of the loans we all do are conforming loans. But once in a while, you get something that's, you're doing your preliminary talk with your prospect, and they say, oh yeah, it doesn't matter that I had a bankruptcy last year, does it? Or because I've got, I've reestablished some credit, and you're like, oh crap, nope, you're I'll put you in my 5-year folder or whatever, Or hey, I just switched from being a W-2 employee to a self-employed borrower, or I've done this or I've done that. So you guys kind of do the sorting out up front, especially if you're well seasoned. And then there's also, you well seasoned people also make some assumptions on people you're working with that drive really nice cars, live in really nice houses, they make some decent money, and they feel maybe entitled. You know what I'm saying? Like, these rules, the normal rules don't apply to me. I know I can get a loan. Well, surprisingly, a lot of them can't. Okay, and we run into that all the time. So that's what these programs are all about. Really targeting those kind of people.
Randy, do most of those people just have too much debt already?
Well, no. Most of those people, it's generally income restricted, Charlie. The target market for an outside-the-box loan is generally income restricted. They haven't filed tax returns in 2 years. They make, $400,000 a year gross and $20,000 a year net on their tax returns. But yet they're driving, nice cars, living in nice homes, living the lifestyle. But yet on their tax return it doesn't show diddly squat as far as income goes. So those are kind of the target people for these kind of loans. All right. And the market share on these loans is dramatically increasing because there's more and more of an entrepreneurial spirit going on out there. I'm sure you've noticed it's a lot more businesses, and the general climate out there is favorable to start your own business, and a lot of these people are self-employed type people. All right. I'm going to give you an example. A truck driver, over the road, OTR, over the road truck driver. Those guys make a lot of money, right, on their tax returns. I mean, I've seen them, $170,000, $180,000 a year, but their expenses are phenomenal. They can write stuff off that you wouldn't believe, and they'll take $180,000 and whittle it down to $35,000. All right. Try getting them, a $400,000 loan with $35,000 worth of income. It ain't going to happen. Not in the conventional world. But you know what? We've got a loan program for that, which is pretty cool.
Do those same people typically file their taxes, or do they?
Sometimes they do, sometimes they don't. Yep.
We're working with a guy that is that guy.
Yeah. But We squeezed that guy into the box.
Yeah.
It wasn't easy, but we squeezed him into the box. All right, so let's move on. Another one is the investors. We're going to hit that pretty hard. Who's working with investors? You don't have to raise your hands. Probably everybody is. Okay, it's one of the biggest things you guys are working with out there because, as Brad was saying, people are in the buying mode right now. We're still acquiring property. Go ahead.
Investor cash flow. Okay, so what are the important topics? We don't use any of their personal or business income to qualify. So we're not asking for tax returns. We're not asking for W-2s. We're not looking at pay stubs.
Oh wait, before you go on, did you guys hear that?
No income verification.
This is an investor loan that we're not asking, and they are not required to give us tax returns, W-2s, pay stubs, 0 forms of income.
We leave it blank, honestly. So how do we qualify them? It's based on the cash flow of the property. So when we do an appraisal, we'll do a rental analysis. The appraisal will do a market rental analysis. And as long as the estimated rent is $1 more than the mortgage payment, it's approved. And the rates are not that bad. It's like they're in the 5s.
Lynn and I closed one. What was 5.75?
Yeah,
Rates in the
under
6s.
Yeah, it was under 6, 5.7, and that was a few months ago. Maybe even lower now. I don't know.
Longer. It was a year and a half.
Oh, well, they may be lower now, but yeah, it was an investor cash flow loan. And I'm not saying who it was, but she had a nail salon. All right, so a nail salon. Hey, guess what? They don't report all their income. Big surprise. All right, a lot of their customers paying cash, so we did an investor cash flow loan. She did not have to report any income to us. Didn't have to show us tax returns.
Wow.
Basically, the only thing we needed was we had to make sure she had a decent credit score. What's the minimum?
640.
640.
640. I mean, come on.
If you're breathing. you should.
Yeah, you better have that if you're wanting to invest. So you got to have a minimal credit score. Plus, we had to verify assets and that she had enough reserves. And we had to do the appraisal. That was it.
That's it.
I mean, that's
So
crazy.
this is a great alternative to like hard money.
Way better than hard money.
If your investors are looking to flip some properties, how many? Well, Matt, what's the limit on the number of properties they can have here?
No limit.
What?
No limit? Is it
Correct.
5?
That's the right answer.
No limit.
Wow.
You can do this all day long.
No limit. Now, we
The
can
one-
only have.
the one gotcha is they do have to have a mortgage. They have to be current on their primary residence. They have to own their own home for at least 2 years.
Right.
So they can't be a renter and start investing in property.
But this is a perfect program for a new investor that doesn't have a very good track record, but he has his own home and he wants to get into investing. It's a great place to start. Great place to start. Questions before we move on?
Big difference here, Randy, with most of the commercial loans we deal with is we have to have a debt service coverage of 1.25.
Ours is
We've got-
1.00001.
Yeah.
And actually,
That's
we
what
can
I'm hearing.
Plus one.
Actually we can go down to 0.8.
But
0.8 coverage?
yeah, but there's a
But
but.
yeah, there's some buts. There's some buts when you get to 0.8.
There's going to be a higher rate. There's going to be more money down. So
But yeah, we
it
can't
needs to make sense.
go to 0.8.
This is the most common sense loan for investors I've ever seen.
Well, it's way better than anything we can get on the commercial side
Yeah.
that I'm aware of.
Right, and I think the exposure, do you have up here the exposure? There's no limit on the number of properties, but I think there's a maximum exposure of like
5 million.
5
5
million.
million
Yeah,
total
something
exposure.
like that.
And the value or the loan itself?
All properties combined, all loans combined.
That's a lot of properties.
I mean, it's big, so it probably won't come into play. But this is like somebody that, anybody know what the inside the box? Okay, back inside the box, Fannie Mae. How many investor properties can you have? Finance.
How many loans can you have?
5, 7?
Keep going.
Okay.
It bounced back and forth for a little while we were in that quagmire, but it's 10. You can have up to 10 finance, your personal plus 9 rentals. But there's no limit. So if somebody's got a lot of rental property, they're up over 10, they say, well, I can't finance another property. Yeah, you can.
Does that count paid off?
No, just finance.
Just finance.
Just finance. No questions, I'll move on to the next one.
Randy, what's their security?
The property.
80% loan to value. So somebody's got to have 20% equity in it.
Right.
Which is typical for investor loan anyway. That's pretty typical for an investor loan anyway, is it not?
Yeah,
Well, yeah,
You can go down to 15 conventional, but you just get
Right.
slaughtered on the rate and the
So
MI
that's
is
pretty,
terrible.
that's pretty typical anyway, it's not like a big
Well,
jump.
80% is on the high end unless you're getting into SBA territory. But the big difference is the cushion, where we have to have like a 25% more income from the property than our debt service. It's a 1.25 debt service coverage ratio. And that's a big difference.
Yep.
And they're talking about just coverage, 1-0.
Yeah.
And
Right.
That's amazing.
All right, so let's move on to one of Matt's favorite loans. I'll let him talk about this one. Take it away.
Well, like you said, for somebody that has the nail salon and they're not counting on their tax returns, or self-employed folks, this is what the best one. No tax returns required, so we're not looking at tax returns again. We are looking at 12 or 24 months worth of their actual bank statements. Can be business, can be personal, and we're calculating an average based on the deposits going into their account for either 12 or 24 months.
So it's pretty easy. The way we're calculating income is we take 12 or 24 months worth of their bank statements. We just look at the deposits. Any deposit, with a few exceptions, because you cannot take like a refund, like a tax refund from your IRS, $5,000,
Or if
we're not
it's-
going to count
If
that.
he's a contractor and he returned $5,000 himself back to Home Depot,
Yeah, getting credit from your credit card or a one-time
that's
sale
not
of a
that's not
residence.
income.
We're not going to count that, but your normal everyday deposits, they don't have to be sourced, they don't have to be seasoned, we just have to see them. Let's say a commercial real estate agent.
Do we know any of them?
Yeah.
We don't know what
Gets a $100,000 commission in February and doesn't do squat the rest of the year.
Been there and done that.
It's kind of hard to get a regular loan when you have income that's irregular like that. This is a perfect loan, but we're going to take that deposit as income and, average it out over the 12 months.
I think we're actually doing one for a commercial agent in this office now.
We don't want to mention names.
I am doing one.
Okay.
Is it this?
Yeah.
Yeah, bank statement. Very popular loan. Very popular loan, especially for self-employed folks.
And is it new too, or just we underutilize it?
We underutilize it. It's relatively new, but not that new. Rates, again, start in the high 5s. You're looking 5s to 6s, on most of these things. But the good news is that we're not asking for tax returns.
So if you have a client who doesn't file their taxes, but is self-employed, so is this the way they should go? Or does it
Now when you say they don't file their taxes, they're not an illegal.
No, they're not an illegal, they're just not, we know who we're talking about, does not file their taxes.
Well, I'm not sure we know what we're talking about, but I don't know.
Yeah.
But yeah, we don't care about tax returns.
She's talking about herself.
No, I'm not talking
We
about.
don't.
So,
We don't care about their tax returns. What we care about is the deposits, though.
but okay, so.
And those deposits can't be from the sale of a residence. They can't be like Matt said, return of a bunch of supplies or a refund.
Okay, so it doesn't matter if their deposits are going in their personal or their business account as long as they're making the deposits.
Right.
Okay.
So you
Yeah,
look
the-
at business and personal?
You can do business. There's different criteria, but that's general.
Can't count transfers as income. Like if they're transferring from savings to checking, that's not
Transferring it from the business
Oh,
to
yeah,
the
that makes
personal can't double dip.
Yeah, okay.
But yeah, you can use business or personal or a combination of the two. Here, I don't read lips very well, but okay.
What about the nail salon person who deposits a bunch of cash?
Mm-hmm. Yeah, it would work for them too.
I did a loan for a professional fisherman. He won money all the time at fishing tournaments, and we did a bank loan.
Gamblers,
Gamblers.
pole dancers.
Drug dealers.
I'm serious. I've done one for
A pole dance?
We do have to ensure that
Bambi.
they've,
yeah.
Bambi.
Was that her
That was
real
her
name?
stage name.
That was her name on the application.
Oh.
I did a loan for a professional escort. She had more money. More money than anybody.
That was her
I've ever
trick.
seen.
The lender's point of view, if we know, like, her client doesn't file, and then they get their assets frozen,
What?
the lender's got a lot of risk there.
Charlie, I'm just going over what the guidelines are and how we get there.
Okay.
Let's don't be a Debbie Downer, and let's don't overthink it. All right. This is what the guidelines are, and hopefully you guys are thinking, oh, well, that opens up maybe a few more doors. Okay, opens up a few more doors for some possibilities on some people that you didn't think were financeable. Maybe they are. All right, that's what we're trying to look at.
So you're saying I should go down to the dancing club and hand out my business card?
You know, I'm not saying, I'm just telling you.
Jen, they got money,
Bunch
Jen.
of money.
We better get
We got more money in our
Well, or you could, you know, when you tuck a buck, make sure your name and phone number and hey, you want to buy a house is on it. I don't know. So, all right. Any questions on that? The other thing I wanted you guys to take a look at was this line right here. Bankruptcy, foreclosures, short sales. Look at this. 2-year seasoning on this product.
It's amazing.
2-year seasoning.
Used to be like 5, didn't it?
Or 7.
Well, 7 is inside the box.
Yeah.
All right, so that's pretty cool. All right, asset depletion. This is the one I want to talk about because this is the one that I've closed a couple of these and potentially working on another one right now. What the client that we're focused on here is maybe a Dunwoody type client that's got a lot of money. Maybe they've moved around. The one I did before he wasn't worried about his next job. He'd been unemployed for 6 or 7 months. So I couldn't count any income for the guy. But he had, $1.5 million, $2 million worth of assets. So he's like, well, of course I can get a loan. I could pay for this house, 4 times over. So why wouldn't you give me a loan? Well, the reality is, as I explained to him, we look at your credit, we look at your income stream to see what your debt ratio is. And right now you have no income stream. So your debt ratio is through the roof. Yeah, but I have enough money to pay for the house in cash if I wanted to. I'm like, yeah, and I can't stop you from doing that. However, to fit inside the box, Fannie Mae, Freddie Mac, we've got to adhere to certain debt ratios, income to debts. All right? He could not do that, not with the qualified income that we were looking at. So we took all of his assets, and through a mathematical formula, we converted those to an income stream and then qualified him that way. So it's really it's a pretty cool loan. It's relatively easy to do.
I call it the retired NFL player.
Yeah, that's another perfect example. They got just a boatload of money in the bank and no job. Okay, this would be the income that they would use. So no employment, no income, no debt ratio in the conventional sense. But yes, we do convert their assets to income and then look at the ratios. They do have to have seasoning on a foreclosure, maybe a little bit longer. They've got to have seasoning on their assets. All assets must be sourced and seasoned for a minimum of 6 months. That was a change. So we do look at things.
Don't stop, please.
I won't, Bob, thank you. Everyone at home, Bob Fasella has entered the building. So we look at things a little bit differently, but this is, again, the type of person that maybe you're working with that you would be shocked to find out they can't get a normal inside-the-box loan. And it's good to know that there is something outside the box that they can go to. Now, this is the type of loan, most of the people we put in this type of loan look at it and say, well, I'll pay the higher interest rate and then I'll refinance it in a year once I meet the regular requirements. All right? That's what this type of, your person did that. He took a $1.5 million loan and refinanced it 6 months later once he met the criteria. Because you don't want to be paying a high rate forever. But the one I just quoted today on this loan right here, hopefully they meet all the requirements. I quoted at 4.5% with a point.
With the what?
With a discount point. Okay? So
That's what
4.5% is, I mean,
That's what
that's what we were quoting for regular rates a year ago.
Yeah.
And now we're quoting that for something way outside the box. So it's not that far-fetched. Questions on that? Because this is one of my favorite loans right here. Anybody? Anybody knew this existed? It's pretty cool.
It's worked for a client of mine that with the divorce, and she was paid a big lump sum from the ex, and the children were already over 18, and she qualified. She was ecstatic.
So this is your NFL divorcee law.
the divorcee loan.
Actors, actresses.
The other one was the stripper nail salon.
Well,
I remember.
we are in an area where we're looking at a lot of actors and actresses that get sign-on bonuses and things like that, but we can't verify their salary yet. We don't know if the season is going to get renewed or what's going to happen. This would be a perfect loan for those kind of people. Okay? Now, when you say paid a lump sum and then all of a sudden got this loan, keep in mind those assets do need to be sourced for at least 6 months. They have to be in the bank for 6 months. So they can't just get it and then the next month go get the loan.
So we work for an inheritance situation. I would
Inheritance,
suppose,
sure.
yeah.
Yeah. Inheritance, yeah.
It's not the lottery loan.
Could be.
If they wait 6 months.
Is
Yeah,
that a thing?
could be.
Or you just being
I'm just being funny.
Okay. I'm like, oh, I don't know about that one.
Does anybody, I've done a loan for a guy that just won the lottery. Anybody else? No, I did. I did, and you know what? He had a short sale.
Of course you do.
He had a short sale, and like a week after his short sale, he won, it wasn't the big lottery, but it was, I don't know, $500,000-$600,000 he won. And
Was that before taxes or after taxes?
I don't remember, but we got him a loan.
Could you use it for you can use it for down payment.
They take back
Yeah.
half.
It's his money.
Yeah. All right, any other questions on this? Great loan. I hope it opens up a few doors for you. You guys know if you're inside the box, there's a long waiting period for bankruptcy, foreclosures. We don't see so many short sales anymore, but
They'll be back.
you know, foreclosure, 7 years waiting period. Well, on some of these programs, 1 day out of foreclosure.
Wow.
1 day out of foreclosure. Now, are there strings attached to it? Yes. Yes, there are strings attached to it. You're going to pay a higher rate, guarantee you. You've got to put some money down. We're going to take a close look at your debt to income ratios. We're going to take a look at it, but, and I see some mouths open back there, but 1 day out of bankruptcy or foreclosure, we've got loans to meet it. That's the outside the box things. You would normally, you're talking to somebody, you're doing your elevator pitch, you know, blah, 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 you're looking for them, yeah, I can't buy a home right now because I just filed bankruptcy. And you're like, turn away and run. Don't have to do that. Okay? We've got some programs for them. Any questions?
One thing, and all these slides we've got kind of the requirements and kind of the upper echelon of the ceiling, like the limit, like, up to 90% loan value.
Whatever.
And when we say rates in the 5s, that's like you're probably almost 2 years out of foreclosure. You don't have a credit score, you've got an 800 credit score, you're putting down 20%, you've got a low debt to, If you're a 520 1 day out, then 10%, I mean, your rate's going to be in the,
You're not gonna get the
you're
loan.
not going to be get the best rate. You're going to get like an 8 or 9% loan. probably.
So that, what you're saying is like, it's like when you're riding by the new construction subdivision, and the sign says starting in the
Yeah.
400s,
Right.
but by the time you get what you want, it's 600,
Yeah.
Yeah.
Okay.
I mean, these are just, we're kind of like skimming some of the guidelines, but if you start layering these things on top of each other, if you want to get a rate starting in the 5s, you doggone well better have a credit score a lot higher than 500, and you're probably putting more down than 10%.
Yeah.
Okay? Non-warrantable condos.
Non-warrantable condos, excuse me,
What's a
condos.
non-warrantable condo?
So, these are all the condos that do not fit under Fannie Mae and the FHA guidelines. So as you see, like what's the Atlantic Station down here? A lot of it is stores and such, and they allow up to 55% of the project can be commercial stores, restaurants. That's a pretty high number. So, also on investor owned, there can be 60% of the condos that are rented out. It's only like 15% under in the box guidelines. Single entity ownership up to 30% of the condo project. I'm assuming
So that's if
just-
there's like a condo that's like has like 5 units, but one guy owns 2 of them. That wouldn't work under normal Fannie Mae, Freddie Mac guidelines. If I can hear it. This is like good for like Avalon or Atlantic Station, which is becoming a lot more popular now. Is the live here, work here,
Halcyon
play
now.
here type thing, where you got businesses down on the first floor, 2 floors, and then above it are condos.
And as those become more and more popular, Fannie Mae and Freddie Mac will change their guidelines. But as of right now, they are pretty strict. By the way, did you guys know, since we're talking about condos, about the FHA changes? We'll just bring that up right now. Previously, FHA, you had to, if you were going to show in Complex X had to be on the approved website for Fannie Mae, or else don't bother showing that condo.
For
FHA, I'm sorry. FHA approved list, or if you've got an FHA borrower, don't bother showing them that condo. Well, that has changed. So just so you know, they're doing what we kind of refer to as spot approvals. So if your buyer is interested in Complex X and it's not on the approved list, go ahead and put it under contract. Make sure you've got a little extra time up front, and we get the documentation from the management association, submit it to our underwriters, and they can approve the complex.
It's
or
gonna,
the unit.
The unit.
it mirrors conventional, the way that conventional financing is
Almost.
condos. It's a
What
little
kind
bit
of
different.
time frame would you expect to get that? You want to get that obviously done during
You wanna
the
get
due
it
diligence period.
Right.
Are you expecting 7 days, 5 days,
I would tack on an extra 7 days.
extra 7 days?
You do a lot of condos, yes?
No.
Anybody that does a lot of condos knows the condo questionnaire is the key
Yeah.
piece that we need up
Sure.
front. Well, the
They're cleaning the
associations
act, yeah.
are,
Well,
the
this is basically the
associations,
same- FHA is basically doing the same thing.
they're basically doing the same thing. They're gonna mirror Fannie Mae, but the associations are running a racket. Sorry,
Yes.
they are.
I know they are.
I mean,
Sure.
flat out, they are. Especially, and I'll mention that, you go to HomeWise
Oh, yeah.
docs, okay? They're probably the most popular, but they're also the most greedy in the world.
Well, we're, with the board, we're working on trying to get those redone where there's like one set price across the board.
Right.
They are.
Because right now, if you order from HomeWise docs, I think most of them, it'll probably be somewhere around $200. And they tell you you can have it in 10 business days. 10 business days. Okay, that's 2 weeks.
2 weeks to send an email back to me.
Right. Now, if you want to pay an extra $90,
They get it 9 to 30 hours.
we'll get it in the next 1 to 2 days. You pay the extra $90, you've got it in 30 seconds. You literally pay it, they hit a button, and it gets transmitted to you. It is a
Shame.
freaking racket, okay? It's terrible. But
What are you gonna do?
it's what we gotta do, okay? So I usually advise my clients to pay the extra $90. Let's pony it up. Let's get it going, okay? But we'll get that. We can get it right away. Submit it to our underwriting condo approval committee, and they get us an answer in 24 hours. So realistically, you don't need 7 days. If they're willing to jump through the hoops, you only need maybe 3 days. But you still need to find out.
Are you finding that those are being approved at a higher rate than they used to? Or is it the same as what it's always been?
Same as what they still have to meet the guidelines.
Yeah, as long as, everyone's paying their association dues or.
You know what the variable is on those?
No.
It's how much the buyer's putting down. A lot of people don't know this. Okay, it's how much the buyer's putting down. If they're putting down 5%, we need a questionnaire that's this long. If they're putting down 10%, we need a questionnaire that's this long. It's a huge difference. There's a lot of questions that are not asked in that limited review.
What are the questions that are being asked if you're putting down less that they don't ask if you're putting down more?
I probably couldn't quote them all to you, Bob, but there's some of them that are.
Just curious what type of questions.
There's some of them that are pretty critical.
Reserves is, I'm on the HOA of my condominium.
The reserves is
And I do.
Reserves, I know reserves is one.
reserves is the biggest one.
So they don't add, if you're putting down 10%, we don't care
They
about
don't really
reserves.
care.
That's
Right.
interesting. Why not?
I don't know.
We're not here to debate that, but I can tell you that you've got a lot better chance getting approved if you put 10% down than if you put 5% down.
And if you put 20% down, you might not even fill out a question.
No, you still have to have the questionnaire.
It's only one question.
But the budget doesn't have to be set with the 20% down.
Yeah, are you willing to pay us the fee for
HOA
this
budget.
questionnaire? Yes, okay,
I know
here
that
it is.
for
Approved.
going
Here you
through.
go.
So, I mean, it's just the way it is,
I don't
okay?
know why.
Litigation is another one too. As long as it's not structural in nature, doesn't affect the marketability of the units, and they have sufficient insurance to cover it, those can be approved too. And I don't know if you guys were paying attention, but on a lot of the other slides for the other programs, at the bottom it does say non-warrantable condos considered. So you could do a bank statement loan on a non-warrantable condo, or the asset depletion on a non-warrantable condo.
I mean, that sounds like it's changed a lot since I did one when did I do it? In August? I mean, it was almost impossible.
Yeah, it has, but I'll tell you that the biggest things we see for turning down condos are reserves and delinquencies. Those are the two biggest things. I had an agent, 2 years ago, that the delinquencies were too high. This agent sits in this room right now. The delinquencies were too high. She got a list of who was delinquent and went and knocked on some doors
I love that.
and got them caught up so that they met the delinquency. Linda Barhumi.
You gotta do what you gotta do.
You may or may not have had
How many units were behind the
I would like to have heard your
There were
speech at the
6.
front door.
How
What
many are
did
in
you
your
tell
building?
them?
How many are in your building?
Oh, it wasn't where I live.
Oh,
It was for my
just
client.
It was for her clients.
No, it wasn't to do with what I'm doing today, where I currently live.
Oh, okay.
It was for, that's when we talk about Keller Williams and going above and beyond, you do what needs to be done. And if you gotta roll up your sleeves and do something you're not very comfortable with, do it.
I tell that story a lot.
Yeah.
Okay,
I mean-
that is that's being a great agent for her buyers. I mean, she went and knocked on doors, and there were some people, as I recall, that didn't even realize they were late,
Wow.
and they were happy to get caught up. And that's all we needed. We just needed a couple. What do we need? Two people, I think, to pay up, and then we met the criteria, and she went and played bill collector and got it done.
How many units were in the project total?
That I don't remember. I know that there was 6 that were late. That's about all I remember, but I
Yeah.
don't
This
remember
is a small
how many.
project, small project. then.
How about foreign nationals? This is one that I've always kind of like turned away, really, to be honest with you. Because we really didn't have a decent program for it. You guys know what a foreign national is? Yeah. I mean, they're here from another country and they don't have a job here and they don't really have a social security number and they want to come buy a house.
If they got a green card and a job, they're okay for something else, though.
In my,
Yeah, if they got a green card, they're okay for convention.
Yeah. Look here, no social security or ITIN required. So it is an available program that's there.
And are they looking at visas? Doesn't look like it.
Does it say that?
I don't know.
I mean, there
Yes.
are few, it says
Yes, they
fewer
are.
country restrictions.
they are.
If you're from Venezuela, don't come knocking. They won't do you.
If you're from North Korea,
Your,
Sorry.
Your type of visa has a lot to do with it, I think.
Right.
From what I know.
But anyhow,
yeah,
you
there's
can
a list
do.
of approved visas for conventional financing.
All right,
Most
that's.
common